Hello everybody and welcome to Green Star Trading with me, Tom. This video on my own and do not constitute financial or trading advice in any way. Right, short video today. We're just going to do a quick update on the IWM, which is the Russell 2000 ETF. And yeah, we're still going sideways and we have been since basically March. So the question is, and as it has been this whole time, are we going to break out to the upside or are we going to break out to the downside? So we're going to look at our two different counts, quickly get through those and look at a few other technical indicators and such, and then we'll wrap up the video. So let's have a quick look at the bullish count. So the idea is we came up here in the primary 3, we've spent all of this time in the primary 4, and now we're going to move up into a primary 5 to complete. Well, this was looking pretty cool, you know, a few weeks ago when we last looked at it, or a couple of weeks ago, where we had this potential diagonal pattern and then a retracement into a 2 which did not break a new low, then we had a bounce. So I guess the only real way to interpret this, if we want to remain bullish, would be that this, since it overlaps, can't be a 3-4, so this would be a 1-2 on a smaller degree. So let's just slap that in there, and then we'll come into the shorter time frame and see if it makes the slightest bit of sense. So that's the bullish one. We'll come in, like I said, in a minute and have a look. So the next thing I want to look at is the bearish count. The bearish count interprets all of the previous price data that we've been hanging around in for months as just a series of 1s and 2s until we break down in a gigantic 3, filling this huge gulf in the volume profile, probably filling this gap down here, heading for a 50% fib retracement or golden ratio retracement. So, pulling it super simply, we have the top of the market here in primary 5, we come down in a 5-wave move into a 1, we come back up in a 3-wave move into a 2 here, which is lower than this low, deep retracement for a 2, no doubt, but still legitimate, and then we come down in another 5-wave move, and this is also a 1, and we come back in a 3-wave move, and this is a 2, and now we're going down in a 3, and we'll finally break this level. That's the bearish interpretation. If I had to call one at the moment, my preference is for the bearish interpretation at the moment. But you know, we've been going sideways for so long now, I think you have to take that with a grain of salt. So now let's zoom in and have a closer look at how the count looks on the smaller time frame. So we're just going to come into, let's come into the 1 hour first. So since we've got the bearish count up, let's see how we could interpret this bearishly. Well, we've got our 1, 2. Sorry, I think that should probably be there, or is that a 3-wave? Bum bum, 1, 2, 3, 4, 5. So I think that's A, B, C there into the 2, 1, 2, 3, 4, 5 into the 3, A, B, C into the 4, 1, 2, 3, 4, 5 into the 5 into a 1. Now that does look like an impulse. Okay, to me it just looks like an impulse down. And then I think what we've got here is, let's have a look. 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5. So that looks like a zigzag. Like so. So maybe move the A over to here. And then this looks 1, 2, 3, 1, 2, 3 to a higher high, 1, 2, 3, 4, 5. So this looks like a expanding flat pattern. So we go A, B, C. So let's just see if we can get 5 waves out of here, diagonal here into the 1, 2, 3, 4, 5. I'd argue we can. So let's throw the 1, 2, 3, 4, 5 into here. This will be minuet scale. Okay, all of this is going to go into the bearish count, and then this is a zigzag into the 2. No, it's not. It's 5 waves because it's not a WXY. It's an ABC because we got more a 90% retracement. So, what's the best way of doing this? No overlap there. We'll check. We'll try this out. 1, 2, 3, 4 WXY into 5. Let's check if this 3 is shorter or longer than the 5. Definitely shorter than the 1. Shorter, longer there, longer there. That's cool. So this isn't the shortest. That looks like 5 waves. This could be 3-wave zigzag, 3-wave. Maybe in here. I'm not sure. Maybe the 4 could be there. So I'll tell you what I'm just going to do, add a couple of trend lines around it just to give me the possibility of considering it as a diagonal into a C later. Alright, so that's the bearish idea, and therefore we should now be coming down 1, 2, 3, 4, 5, 1, 2, and then down in a 3, finally breaking all of this after months and months and months and months and months of topping out. That's what the bearish count is assuming, that all of this is just the market topping out. So A, B, C, and this will be minuet as well. Alright then, let's add all of that lot to our bear count. And these, we'll just leave those on their own for the moment. Alright then, so now let's switch off the bear count and see if we can make sense of the bullish idea. So this is a 1, 2, and this is a 1, 2. Well, it's not as neat, I think, as the bearish count at the moment. So really, with such a huge overlap here and 3 higher highs and higher lows in sequence, you've got to try and get this to work as a diagonal, otherwise you haven't really got anything to work with here at all. So it'd have to be 1, 2, 3, 4, 5. So in this case, 3 should be shorter than 1, 5 should be shorter than 3, because we're saying it's a contracting variety. So let's just have a look, see if that's right. 4 down here, the 5 would be shorter, the 3 is obviously shorter than the 1. Is the 4 shorter than the 2? Oh, that'll be interesting as well. Down to here, up to here. Ooh, that's debatable. We've got this little wick down here. So whether or not this is a diagonal, that is called into question. Could we perhaps say 1, 2, and then 3, WXY into 4, and squeeze 5 waves out into here, forget the diagonal idea, and just have a completely disproportionate outer sequence and ugly looking impulse wave? I guess, why not? We're in a situation now where we've been going sideways for so long that if it's just another part of a free wave, another free wave part of a greater WXY correction, it could just carry on. You know, until we get a significant break of some level, it's just not really, it doesn't really mean anything at the moment until we see it break one way or the other. Impulse in here using a diagonal, I guess. This would have to be a zigzag, although 1, 2, 3, 4, 5, A, B, squeeze 5 waves into here. It looks neater as an impulse down as a wave C, I'll say that. So yeah, that's really all I've got to do on the bullish count. It could be right, it doesn't look it to me. I'd argue that for the meantime, I'll stay on the bullish side for a moment. I'd argue that this looks like an impulse and this looks like a free wave correction. That looks much more natural. It looks to be a much nicer fit, and therefore I'm going to stick with that for the moment and say I'm now suspecting that we will break to the downside. I'm not going to say when, because I could have said that at any point in the last 6 months and been wrong. I just suspect it's coming sooner or later. So where on earth is this one? Have I put that in? Why is that in Bear Targets folder? That is the bullish part of the bullish count, so let's throw it into there. Okay, so now that we've done that, there's our 2 counts. Like I said, I'm leaning towards the bearish one more, because the more recent price action, as I pointed out, which is essentially what looks like an impulse down and 3 waves back, that looks to make more sense. That looks cleaner. So let's have a look at what we've retraced from a point of view of our move down. So down to this low here. Oh, I might have to come in and correct that. So make sure we're in the right place, right on this peak. And then come down to here. Stretch it down to this peak. So we've topped out roughly around the 78.6. So I guess you could say that the first 1, 2 down on a larger degree topped out around the 90%. This one topped out around the 78.6%. So are we going to see another move down and then another move back, which tops out around the 161.8? It wouldn't surprise me if we just step down like this, going 1 2 1 2 1 2 until we finally get some kind of break down. Now on that note, let me just save this first, lock it, hide it out of the way, and let's have a look at a couple of targets then on the idea that we do break down. First of all, we've got our levels. We've got the 23.6% Fibonacci retracement of this primary 3. This is from the bullish idea. Either way, even though it's a bullish idea, it doesn't really matter. It's a support level. You know, it's been, whoops, so we've got the magnet on. It's been supportive here, and it's been supportive here. So that's gonna, this is a major test. If we come back down here, break this level, get through these lows, and this low, and then these lows back here, that would break this pattern. But could it just be, as we were literally discussing a moment ago, simply break it to go 1 2 on a smaller time frame again before finally making its way down here? So if it is bearish and the bearish count is correct, that's likely what it will do. It will build some, it's either going to go A, B, C, extended C, or it's going to go 1 2 1 2 1 2, then absolutely dump, which would be building a huge extension and wiping out most of this market if that happens. We've got the gap down here to fill at 164.86 with the 50% fib down here as well. I think I've mentioned in previous videos that essentially until you get through this level and break it, there isn't really anything here to catch the price. You know, this is untested, total lack of market acceptance here. So you could find support probably around the gap fill. Once the volume profile starts to fill out around the 50, then we get a much healthier area of support around the 61.8, but that would be a pretty massive collapse. That would be huge. So that's the way I see things at the moment. If there's one more thing I want to look at, it would be throw a pitchfork onto this, and then that will probably be it, I think, really. So let's just do that now. First thing I want to check is, did that one? Alright, see, that was me thinking 1 2, but then we went A, B, C higher. So I can use this pitchfork and just come in and move it across to a new pivot, because it's the exact same place I'd expect to see it finish. We just made, instead of this being an ABC, this is an ABC. So unlock, yank it over here, put the magnet back on, get it to touch. Alright, so there you go. So what, is there anything of any significance here at the moment within this pitchfork that would help us? Well, not convince ourselves that it's correct, but is trading occurring within these levels in an active way? Here, test on the median line here, nothing here really, and then test here recently on the 61.8. Nothing yet convinces me that this pitchfork is now guiding price action. It could be because it's very early days, so let's leave that one, lock it, hide it, and then finally we should have a look at how things look from the bottom. Pitchforks, that's that one, the larger one. Okay, so it's pretty clear with our pivot that we used here as our 1 2 that everything up, whatever it was up here that completed, probably around the median line, or around our peak here I should say rather, this is now done. Okay, so whatever this is anymore. I mean, that's obvious. We've been saying that because we've been saying 3 4, so this is separate way degree, 5 will begin, or we're saying 5 at the top, and then this is just a big 1 2, and we're going to dump. Alright, so pitchfork confirms that none of this belongs to this wave degree. It's a separate wave degree which will either go higher or has already begun breaking down. Right then, so let's just do some basic technical analysis now then, see if there's any clues. I will just hide this out of the way. bring up our exponential moving average ribbon, and then bring up our indicators. Come back out to the weekly time frame. I was just gonna move our favorites bar over there. Zoom in. So still coiling the 10 and the 20 exponential moving averages together on the weekly time frame. Just getting closer to each other and closer and closer and closer, bringing the 60 up. Now from a basic analysis point of view, this is typical of a bullish consolidation before moving higher. This kind of behavior, I'm sure you've probably witnessed it before, which is, as I've said in multiple videos, you either correct in price and have a big move down into these moving averages while they're still a long way below you before moving back up, or you waste time until they catch up with the price. Okay, and that appears to be what we're doing. So, but it's not confirmation until we break out this high. I would not be bullish. Like I said, the count with this move down, the 3-wave move back, that supports a bearish idea. So we're below the 20 and below the 10 on the weekly, maybe a flush down to the 60. It hasn't happened yet though. I mean, we found support in the middle of nowhere on the weekly time frame, and we know why, because of these previous lows. So exponential moving average is not really playing much significance on the weekly time frame at all currently. Right, RSI continues to cool off as it has been the whole time during this sideways move, as has the MACD. So coming back to the zero bound here on the MACD, so it feels a little odd that we would have spent all of this time cooling off just to dump. But it's possible. Like that's the problem when you get to a market top. Market tops look very similar to a consolidation before moving higher, because we're either building up waves within waves, or we're just building up a very complicated correction. Let's come down to the daily time frame and see what we can see. So below the 10, below the 20, below the 60 on this time frame. Yeah, the 10, the 20 and the 60 have been coiled together the whole time now, consolidating around one another, whipsawing the price in between and around them. And now we've had, while we've been waiting, we've had this 250 come gradually up to meet the price. So are we going to waste more time until the 50? I mean, the 250 is just shy of this lowest low here. In fact, I think it's already in the territory of it. So you could argue a test down to the 250 now would still be within these lows. Maybe a test of at 23.6 again. Right, we've got low, higher low, low, higher low. No divergence to speak of here. We've got high, higher high, high, higher high, higher high, and higher high. So price is tracking, or momentum is tracking price. Same deal with the MACD here. So we can't really point to any sign of impending or immediate weakness. Crossover again on the short time frame of the signal over the average over the signal, sorry. But we've been doing this the whole time, so we can just come down, whip back around again. Alright, so to sum up, I think we'll leave it there. I'm on the Elliott wave point of view, I'm leaning bearish at the moment, purely because I think I can see a 5-wave move down and a 3-wave move back, which is the whole point of Elliott wave at the end of the day. That's down to whether or not I've interpreted this count correctly, but all we really care about at the end of the day is getting below, above this high, or getting through these lows and getting out of this range. Once we finally get a move down to confirm this being an impulse and a correction, you can be bearish and get in on the smaller time frame. If we finally break higher, we can assume this correction is over and we'll see an impulse wave up to the upside into primary 5. Alright then guys, thank you for joining me on this technical analysis of the Russell 2000. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And as always, thank you very much to my patrons. Your support is greatly appreciated. If you're interested in joining the Patreon, there's a link in the descriptions box below. Head over, have a read of the tiers, see if there's anything you're interested in. And if you're not following me on Twitter, there's also a link to my Twitter feed in the descriptions box below as well. Alright guys, take care of yourselves and I'll be back with you soon. All the best. Bye bye.